Hi guys, welcome to Bitcoin Bounce. My name is Deon and today we're marking up the ADA chart. So to mark up, I would normally start on the weekly. That's the most reliable patterns that you would find there. And trend lines and so on, they would be stronger than obviously than the minute chart. So I start with the weekly and work it from there. So I would firstly look, most important to me is the supply and resistance zones. So I would look for those first, and so horizontally. Um, and after I've done that, then I would go through the time frames and then look for patterns. So the patterns are like these, just the triangles, wedges, trend lines, channels, head and shoulders. So those things, you would have to just get to know them and know that that is bullish, that is bearish, that could go either way, and so on and so on, so that you, when you find a pattern, that you know what the kind of expected most usual hit rate of that pattern would be. It doesn't always play out like that, but sometimes it's just a fake out and you're being set up to think like that is going to go break out to the top side, and maybe it does and everyone gets in and then it breaks down. So but those are just market manipulators, but on average they normally play out in the direction that they're supposed to. So that you guys will just have to go and learn in your own time. So on the weekly, I started watched 1,000 YouTube videos on how to actually draw the horizontal lines. Some guys would use the wicks, some guys would use the bodies. Eventually I settled on looking for the big moves. So like that one there, that big move that started there, but then you don't know, did it start there or did it start there? And what what also was quite important is to actually get an open and a close on the same horizontal line. That was a fairly strong kind of area where price then got to that level and then bounced back in the opposite direction. So those were kind of the lines that I was using. But then I was introduced to just actually trading the rounded off, we call it just the bank numbers. So where this is now 1863, now one would actually intentionally go and buy at 1863. So the banks and the big players and whoever would just normally say, okay, I want to buy or sell at 120, not 1863, like we've got here. And if you round that off to 120, this is pretty much kind of the same line. So we do that 120. So it's kind of the same area, and then I'll show you if we. It's not like perfect on the weekly, but if you zoom in then to the 1 hour, I just wanted to give you guys an idea. Let me just find that where it was. There we go. So it looked as if you should go for 118, but you can see like it's probably because that area hit quite often. But what I was then also made aware of is to rather just treat it as a zone and not an actual just a fixed line at like 120. And then you see it becomes very, very accurate. But the 120 is then just a guide. Okay, this is we're now approaching an area where we're going to have a change in direction or support or resistance when price approaches that area. So you can see when it got into that zone, then it rejected there. Yeah, it didn't quite reach the 120. So if you were trading that exact number, you probably wouldn't have hit your take profit if you entered in a manual trade. But people got used to knowing that the 120s were the actual levels. Then lots of traders like us, the smaller guys, would then say, okay, no, but I just want to make sure that my order gets filled, and then they put them just a little bit below the actual numbers that they think is going to be hit. So that's why you just treat it as a zone rather than an actual hardcore exact line. So let's just delete these, and I'll get back to the weekly. Okay, and then also I just mark up the area that we're trading in at the moment. So it's pointless marking up thousands of lines above us here. So I would then just mark up the little area. So I've done it already just to save us some time. So if I turn this on, and these are then the rounded off bank numbers, 20, 25. So it would normally be 20, 30, 40, 50, and then I just put, you'll see like a thinner line halfway between those. So like at 45, 35, 25. So just by putting in those and looking at the price action here, you can see that, you know, we didn't have to spend hours trying to figure out where these lines were. Like, yeah, just putting it in manually already there, 40 cent, you can see hit perfectly, and yeah, was support and resistance area, and there also it hit perfectly on 45. You can see how accurate it actually was if those were your targets. So if you had to trade between zones from there to that zone to that one, that one, that one, that one, you see every time you would hit your target, and the target sounds small, but they're not actually. So it's like 16, 15 odd percent between these levels. So they're good moves just trading between these levels, and it's just quickly to mark up. And as I say, you would just treat them as zones. Like here, you can see if we treated that as a zone, not an actual exact line, we would have won this trade as well. So we would sell slightly under those zones if you were coming from the bottom up. Anyway, so once I've done that, then I put them in folders. So if you go to this little icon down here, object tree, you can turn on and off folders and all your drawings and file them. So I do that. So this is weekly support and resistance. Those are that's like any patterns I find, then I would just put in week 1, week 2, week 3, week 4, and then I would know, okay, these are the different patterns. So sometimes you would find 3 or 4 patterns on one time frame, so I would mark each of those and then just flip through them and see when they get invalidated, just delete it. But as long as they're kind of still active and they're trading within that pattern, then I leave them there. So you never know what pattern is actually going to be the one that plays out. So after I've done this, then I turn off those lines. So now I've got an open chart again, and then the only pattern I could find that made any sense to me here was just a channel, parallel channel. So it's just running to the downside, and I just try to find things that have had a few hits. So this is touch points there, 1, 2, 3, 4, 5, 6, 7. So it's hit quite a few times, making it kind of a reliable pattern to follow. If we just had like 1 or 2 touches, then maybe it would be less reliable. But yeah, so this is what I found on the weekly. Then I would then just put that in its own little folder, turn it off, go to daily. So on the daily, I've found this wedge pattern, which I don't think is very reliable. I don't know, I don't like it much, but anyway, it could be. And a falling wedge would break to the upside, and then also there's this last bit is trading within this parallel channel to the upside. Then I would then just turn that off, go to on the 4 hours. I didn't find anything other than a parallel channel, but we'd already found that in the daily. So if you just flip the daily on and off, so okay, we've already actually got a channel there, and the daily is more reliable, as I said, than the 4 hour or the 1 hour. So I'll just keep that on the daily. So there was nothing on the 4 hour that really interested me. On 1 hour, I would then do the levels. I also couldn't find any specific patterns here that stood out to me. So on the 1 hour, then I've just drawn levels. So I always do these levels, just these zones, call it zones, where prices come to. So let me just open that up. Just wanted to turn this one off first. Okay, so I've got these zones, and those I just get by just kind of eyeballing it and just see, okay, yeah, we've had three hits to the top side, we were rejected. Yeah, we came back down, kind of retested that area. In this area there was a lot of sideways above and below this support resistance. The same like little zone, came back down later to retest it, bounced exactly in that little zone, and same thing there and same thing there. We've hit it a few times now going to the top side and then got rejected. So these are kind of the zones, and then just to make it worthwhile trading between the zones, it kind of for me always turns out around about 2%, but different charts and different coins could have different kind of levels that they hit regularly. But so on the 1 hour chart, normally it ends up around about like 2% between them. So that gives you a nice kind of trading area. If you trade leverage that 5x leverages could become 10, or if you do 10x could become 20%, just this little move between these levels. And as you can see, they're fairly accurate. Like, yeah, you would from this bottom hit the top, from the top hit the bottom again, back to the upside, back to the downside. So they're fairly accurate to get your little 1.5–2% trade between these different zones. So I map these out, but this is not specific at all, the 2%. I just wouldn't like put them like 0.2% apart, so it has to be just worthwhile trading. So from, say, even 1.5 to 3 or 4 or 5%, whatever, between these little zones is kind of perfect. So it just needs to be worth your while to actually spend the time and put in trade when you get to that level. Then once I've got these levels like kind of roughly mapped out, I would go and then change my chart here from the candles to just the actual line chart, and then just see if there's anything maybe that I missed. So this then it takes away all the noise, and it just shows you where actual price came to. So you can see, yeah, we got into this area, kind of consolidated, went up there. So I just try to see if there's anything that looks like a good move that we might have missed, and like here you can see there's this line here that we hit a few times. That's why I hit it. Then I would just put another little line in there, but I wouldn't put another zone. So I just put a little line and say, okay, that's an area of interest to me, because we came up there and got rejected, then came up there again, and then eventually broke through, came kind of back down to that area, come and hit it at the bottom, and then back up to that area and got rejected again. So it just looks like it's kind of a important area. So if you are going to take a trade, then not maybe take it if it's like right there. Just wait until you've, like, if you're trading to the upside, just wait until you've like broken out like there, kind of above it, and so on. So I would just mark out any areas of interest. This could also, say, be one here. If you have a look there, so it's come up a few times to that kind of area. So I would just mark those around the actual price action to see if there's anything where price is like actively rejecting, or where it's bouncing and so on, and I would just mark those out as well. Then that would then basically be what I'll just put it back on the candles. So now looking for trades, if you're wanting to trade, say, yeah, on the 1 hour chart, I would just squish everything up a bit, and then if we wanted to just say take a trade to the upside, I found this little line here as well, just a trend line that a few times we've come up and completely rejected. You see there exactly, and kind of in this area again and there, so a few times. So I just marked that up as well. So like at the moment we've now broken out above the little yellow line above our area of interest, so this is like a good retest area to go to the upside. But before we take this trade, then I would just flip through my support and resistance lines to say, okay, the biggest important line is up here at 40 cents, so that's not close to where I'm trading at the moment, so that doesn't bother me. That pattern we found on the weekly you can see that we're kind of in that area. That's maybe why we rejected now. So if you had to flip through these, you can see, okay, we want to take this trade to the upside, but we're like on a weekly rejection area. That was that channel, remember, that we found right in the beginning. So it's on the weekly struggling to break out of that channel. So now you could say, okay, maybe let's just break this area first, but on the hourly we're within that little zone. So the safe trade would actually be just to take it from this zone here and to do a buy trade from above that, because you're like basically buying into all this resistance, the weekly and then that hourly. And we can also just flip through the rest. So on that, this was the daily, and on the daily we add that channel to the upside. So on the daily, there's a nice move just to the middle section of that channel, which is normally resistance, but this could be a fair trade, so the daily doesn't bother us. And that's kind of all we found. So we didn't find anything on the 4 hour and so on. So there's you can then decide with all that info at your fingertips now if you want to take this trade or not. So personally, I would say let's wait for that, or otherwise we look for a rejection under this yellow line and trade back to the downside, because that weekly pattern was basically more to the bottom. It would break down to the bottom side. So, and also in this case, you can just flip on your stochastic and volume and MACD and whatever else you use to just get extra kind of confirmation. But just by price action, this would give you a very good idea of what's up ahead, and how much scope there is in your trade. And also, if you wanted to trade the different time frames, so say you wanted to HODL, then you would look at the weekly, and you would obviously take your buys on the weekly and look for entries on the say the daily and the 4 hour, look for a good entry. But you would actually take your trade on the weekly, and if you then put this up, you'd say, okay, I wouldn't get into this weekly trade until we've broken out of this channel here, and then go to the daily and the 4 hour, look at the patterns you found there, just to try and find a good entry. But at least you're not going to get into this on the weekly for a long-term hodl until you've broken out of this channel. We would have to be above this channel, because it could break back down to this middle line or back down to the bottom. So a good space to buy would obviously be right at the bottom, if we had come down that far. But so that's how you would then work it. And if you're like a day trader but you don't have much day trading time, you can look at the daily and look at 4 hour for an entry. And if you were like an active day trader like Joseph and I are, I kind of look for entries on the 15-minute to 1 hour, but on the 4 hour and the daily time frame. So I would enter on 15 minutes, hold it for kind of the 1 hour trade, and then hope that I got in on a trade good enough to actually trade it up to the 4 hour chart, and maybe even leave it open for the daily then, but keep on just moving your stop losses until you've got a good daily entry. So you started shorting there on the 15-minute chart, and it turns out that on the hourly it's still a good trade, 4 hours still a good trade, and daily it's a good trade. Then you just keep it open and just keep on moving your stop loss down and down as it moves down. So that's kind of my goal, is to try and find a good entry, and not to actually cap it at a good move. But that is if you are awake and you're trading and you have the time to do that. I think that is the only other thing I wanted to tell you is that what also helps me a lot is just to do different colors for the different time frames. So I'll just click on a color here. So I've in TradingView you can go and set up your fixed color. So that's my monthly, weekly, daily, 4 hour, 1 hour. So you get used to your time frames and the colors that they represent. So if you are trading on the 15-minute chart and you're flipping through your different colors, you can see, okay, that I know that's the weekly, I know the blue one is the daily, and the yellow ones are the hourly, and so on. So it just makes it, once you get used to those and you always use the same colors for the same time frames, it saves you a lot of time in the long run. And I think that's all I wanted to share with you today, guys. So we'll be back tomorrow morning. Joseph will actually be back later this afternoon, and then we'll do our show tomorrow morning, the two of us together. And then we'll look through these charts, and next week we'll start trading this actual ADA chart that we marked up now, and keep on adding to it and deleting stuff as they get invalidated and so on. So this is the basic, and that's then what I would then use to open our trades. That's it from me. Thanks, guys. We'll see you later today. Cheers.